Hello and welcome to Bitcoin Dorks, your daily source for all things cryptocurrency. Today, we're going to be talking about the proposed digital asset regulation bill in Australia and its potential impact on the cryptocurrency industry. As the world becomes more digitized, cryptocurrencies are gaining in popularity. With that popularity, however, comes the need for regulation to ensure that digital assets are used safely and responsibly. The proposed digital asset regulation bill in Australia, introduced by Senator Andrew Bragg, aims to provide regulatory clarity for digital assets and products while establishing a clear legal framework for businesses operating in the industry. The bill focuses on several key aspects of the digital asset industry, including the licensing of digital asset exchanges, combating money laundering and terrorism financing, and providing greater consumer protection. One of the central provisions of the proposed legislation is the requirement for digital asset exchanges to be licensed by the Australian Securities and Investments Commission, ASIC. This licensing requirement aims to ensure that exchanges operate transparently and securely and that they comply with a variety of regulatory obligations. By ensuring that digital asset exchanges operate in this manner, the government can help to prevent fraudulent activity in the industry. The proposed legislation also includes provisions aimed at combating money laundering and terrorism financing in the digital asset industry. Specifically, the bill seeks to establish a digital asset anti-money laundering, AML, and counter-terrorism financing, CTF regime that would require digital asset businesses to comply with AML and CTF obligations. This is a critical step in ensuring that the digital asset industry operates safely and responsibly, and it's something that many other countries are also exploring. In addition to these measures, the proposed legislation aims to provide greater consumer protection in the digital asset industry. This includes requiring digital asset businesses to have adequate measures in place to safeguard customers' funds and assets. Given the decentralized nature of many cryptocurrencies, ensuring consumer protection can be a significant challenge. However, the proposed bill seeks to address this issue by establishing clear guidelines for businesses operating in the digital asset industry. While the proposed digital asset regulation bill is still in its early stages, it's clear that the Australian government is taking the regulation of digital assets seriously. The bill represents a significant step forward in establishing a more regulated and legitimate digital asset industry in Australia. However, it's worth noting that other countries around the world are also exploring digital asset regulation. For example, the United States is currently in the process of developing a comprehensive regulatory framework for digital assets. This includes proposals for a digital asset bank charter and the establishment of a digital asset market advisory committee. Some members of the cryptocurrency community may view regulation as a negative thing, as it could stifle innovation in the industry. However, it's important to remember that regulation can also bring benefits such as greater transparency and accountability, which can help to build trust and confidence in the industry. Additionally, regulation can help to protect consumers and investors from fraudulent activity, which is unfortunately still prevalent in the cryptocurrency industry. That being said, there are concerns that overly restrictive regulation could stifle innovation in the cryptocurrency industry. Blockchain technology has the potential to revolutionize the way we do business, and overly restrictive regulation could hinder this progress. It's therefore important to strike a balance between regulation and innovation in the cryptocurrency industry. Overall, the proposed digital asset regulation bill in Australia is a positive step towards creating a more regulated and legitimate digital asset industry in the country. It will provide a framework for businesses and investors and help to mitigate the risks associated with investing in digital assets. In conclusion, it's clear that the regulation of digital assets is becoming increasingly important as the industry continues to grow. While some members of the cryptocurrency community may view regulation as a negative thing, it's important to remember that it can bring benefits as well. The proposed digital asset regulation bill in Australia represents a significant step forward in establishing a regulatory framework for the digital asset industry. However, it's important for the industry to strike a balance between regulation and innovation to ensure that blockchain technology can reach its full potential. It's also worth noting that digital asset regulation is still a relatively new area, and there are likely to be further developments and changes in the future. As such, it's important for businesses and investors to stay up to date with any regulatory changes that may affect the industry. Furthermore, it's important for the cryptocurrency community to engage in constructive dialogue with regulators to ensure that any proposed regulation is balanced and reasonable. This can help to ensure that the industry can continue to grow and innovate while also providing a safe and secure environment for investors and consumers. It's worth noting that the proposed digital asset regulation bill in Australia is just one example of the global trend towards increased regulation of the digital asset industry. Countries around the world, including the United States, Singapore, and the United Kingdom, are all taking steps to establish regulatory frameworks for the industry. As such, it's clear that digital asset regulation is becoming an increasingly important issue and one that the cryptocurrency community will need to engage with in the coming years. In summary, the proposed Digital Asset Regulation Bill in Australia represents a significant step forward in establishing a regulatory framework for the digital asset industry. While there are concerns that overly restrictive regulation could stifle innovation in the industry, it's important to strike a balance between regulation and innovation to ensure that blockchain technology can reach its full potential. Additionally, it's important for the industry to stay up to date with any regulatory changes and engage in constructive dialogue with regulators to ensure that any proposed regulation is reasonable and balanced. That's all for today's video. Thank you for watching Bitcoin Dorks, your daily source for all things cryptocurrency. Don't forget to like and subscribe for more videos like this one.